Good afternoon. This is Brian Splitt with Allendale, bringing your closing commentary for the week ending Friday, November 18th, 2011. And as far as the grains go, we did have some mixed trade today, starting lower on the session across the board. But after lows were made near 11 o'clock, we did have some short covering and some profit taking. So as far as settlements go, December corn was down 4 1/4 today. 6.10 1/4 was the settlement price. That is down 28 1/4 cents on the week. The December 12 contract down a penny and a quarter at 5.59. That is down 15 cents on the week. And funds were sellers of approximately 8,000 contracts of corn today. On the soybean side, the January contract was actually unchanged on the session at 11.68 1/4. That is down 7 1/4 for the week. We had November 12 soybeans up 2 cents at 11.81 1/2, and that is down 11 on the week. And it was estimated that the funds did buy 1,000 contracts of soybeans today. As far as the wheat trade, a little mixed. Some of the contracts higher and some lower depending on the exchange. December Chicago wheat up 5 3/4 at 5.98 1/4. That is down 18 1/2 on the week. The December Kansas City contract up 2 cents at 6.68 1/2. That was down 35 1/2 on the week, while the December Minneapolis contract was lower today, down 7 3/4 at 9.17 1/4, although that is only down 17 cents on the week. And it was estimated that the funds did buy approximately 1,000 contracts of wheat today. As far as why the market is moving this way, we still have corn under pressure by concerns about demand, mainly driven by 2 weeks in a row of very poor export sales. Yesterday's export sales, again, the worst number on record for that week. So we need to see some demand come back in here to support these markets. But we did hear that South Korea purchased 70,000 tons of corn. That was done overnight, and that was not reported by the USDA, as the USDA will only report sales of 100,000 tons or more. This is according to some European traders. So we are seeing some minimal demand come in here, but really the big players in the market might be waiting for somebody else like China or Mexico to come in here and buy a significant amount. Other than that, we have the soybeans really being supported over the past several sessions by talk of China buying. It was announced this morning that they did buy 125,000 tons on top of 420,000 tons that was announced yesterday. So that takes us pretty darn close to the 600,000 tons that was rumored to have been purchased by China. They may have done 600,000, and maybe the other additional sales were small enough to not be reported. But the pressure from beans today really coming from the lower corn trade and just the overall concerns about the European economy that is still weighing on a lot of the markets that we're looking at. Now, one thing of interest is that the January soybeans did hold the lows on the continuous chart. So if you go to a continuous chart and go into a weekly setup, the November contract made a low of 11.52 back on the October lows, and today's low in January was 11.52 3/4. So we are holding the continuous chart lows, and as long as we hold that, we can expect to get some bounces from these levels. But if those levels are taken out, we're going to look for more fund selling and more sell stops to be hit. And another interesting tidbit is that with the November soybeans going off the board last week and January soybeans now being the front month contract, the continuous soybean chart actually has soybeans up 2 1/4 cents on the week. Moving to the meat trade, as far as the December hogs, last trade in the Globex was down 5 points at 87.40. The February up 42 at 90.85. In the cattle, the December down 147 at 119.52. The February down 202 at 121.57. Now, we did have some cash cattle trade this week at 122 in Texas and Kansas, bid at 122 in Nebraska. But the news this afternoon was the cattle on feed report. Looks like placements came in at 99.5, which we see as neutral. Marketing's at 103, which is slightly friendly. And cattle on feed overall at 103.7, which is also neutral. But as far as the hog market, we've got some continued pressure from overall cash hog and wholesale pork moving lower. Looks like the December contract is at a premium to the CME cash index by about 2.5 cents. So with the premium to the index and also a premium to the Iowa-Minnesota price, the market is potentially set up for a little bit of lower action here going into next week. As far as outside market activity, Dow futures up 45 at 11,784. The S&P futures up about a point at 12.15 3/4. Looks like crude oil down about $1.40 today at 97.42. And today is the last trade for December crude oil, so January will be the spot contract as of Monday. Gold up about $4 an ounce at 17.24. Silver up 80 cents today at 32.30, so good moves here in silver. And the dollar index down about 23 at 78.26. Again, want to remind you that Allendale will have its annual conference January 20th and 21st. Please, if you have not reserved your spot, give us a call at 1-800-2-MARKET. That's 1-800-262-7538. You can also reserve your spot online at www.allendale-inc.com. And good luck trading to you next week. Thank you.